Hey, what's going on, guys? It's in the Yama Trades again. Coming back with another analysis on GJ, which will be considered Great Britain pound, Japanese yen. A trade I took today. Well, I took it yesterday actually, and held it throughout the whole day. And this morning, it actually closed. I would say maybe around 5 a.m. or 4 a.m. The position closed for me. It was a sell position that I took. And today I'm just going to do an analysis on, why I took the position that I took, why I decided to hold it at the point that I held it, and just kind of look at the different parameters and tools that I used to determine entries as well as exits on this trade. So as you can see here, I'm looking at a weekly time frame from this position here. All these green, magenta, and turquoise blue lines that you're seeing on the chart were accumulated. I ended up putting them on the chart from the line graph. So looking at the line graph, as you can see from a weekly standpoint, we see where price pretty much bends. From these just different standpoints, you could go back in time and you'll see that price respects these lime green lines, these green lines. So those were my key levels that I marked up on my chart. And then kind of going down from the weekly to the daily, you were seeing other, key levels, price respecting these magenta lines, from both ends. Even if you looked at it from a candlestick perspective, you saw the wicks at these different areas, and I just kind of went down from, the daily down to the 4 hour, four hour being this blue line. And that's where I kind of stopped at. But once I had these areas marked up on my chart, then, it was kind of fair game, and I was looking at candlesticks the whole time. So there was a few things that I was looking at. First and foremost, I saw this movement here. So if you're looking at it from a 4 hour perspective, you have an uptrend taking place in the downside. So price is pretty much uptrending nicely. And then from a bigger perspective, back from early March, you had this downtrend taking place as well, right? So price was pretty much respecting that area, respecting it, and it was coming in this area. But I saw this. This is what really, kind of drew my attention to this chart. I saw price come here, double topped, came down here, saw price come here, tap here, and then I expected price to come back down here to touch this line and then do some type of upward movement, which it did. It's easy to say that in hindsight when you're looking at it right now and seeing the whole movement played out. But when I was actually now analyzing this chart, there was a few things I was looking at. First and foremost, I was looking at the fib levels. So I took my fib from the top down to the bottom, right? And there's a few key levels. So you have your 382 level, which would signify a strong bearish movement, right? Then you also have your 50%, which is a normal bearish trend to the downside. Then you have the 0.618, which is letting you know that the trend is weak. So that's pretty much telling you that, okay, price is going to eventually retrace and then turn to the upside, or something along the lines may happen because it's a weak trend. So I saw that there, right? So I marked those levels initially. So I just pretty much just put something here. I also put something here because I look at these two levels when trading, right? 50%, I don't really like trading 50% on the 4 hour time frame to the downside or the upside because it's kind of like halfway point. But then there was also confluence in these areas. So if you look, my key area that I wanted to trade was a 0.618. The reason why is because when it came down here, you saw this happen. Price tried to break down through it. It couldn't do it. So then it started to uptrend. Then we saw this happen. This big bullish movement to the upside. So we know that on a 4 hour time frame, right, that we had a 618 level right here. We also had this downtrending line, which was right here. And that was two confirmations. So we wanted a third confirmation, right, to ensure that, okay, this area is going to be respected. These wicks is a confirmation when you look at it in hindsight. But I'm going to show you what caused me to take this trade at this area here, right? So After I got those levels and I knew my fib levels, the 61.8 and the 382 to the upside, came down to a 1 hour time frame. I just looked at what was happening. So you see your lower highs, lower lows taking place, and all of a sudden you had, a higher low, higher high. Price started playing around, and then we had this take place, this consolidation. I wasn't touching this right here. I just let this play out. I let all of this play out, played out for damn near like all of May 1st, right? And then this took place. Price zipped through here, came down, came back up, and then I saw this bearish engulfing candle right here in this area, right? And that was my first signal. So that was my third confirmation that, okay, price is respecting this trend line. So pretty much I was on alert right there. So then I started to see this happening. Price was downtrending. It was downtrending. A lot of bearish candles, sell-offs taking place, right? And then I dipped down to the 15-minute to kind of observe what was really happening with price. So, this was a consolidation period that was taking place, right? And then we saw this happen. We saw a breakout of the consolidation. But when we see a breakout of consolidation, we want a clear breakout. We want a clear breakout, and then we want a retrace of the 50%. Right here, a retrace of 50% is down in this area, as you can see, 50%. But that's not clear. So it wasn't clear enough for me to take a position right there on that retrace. You know what I mean? So I didn't look at any type of bullish uptrending movement. So it kept selling off, and then the middle of the night or early in the morning, early morning on May 2nd, which was Wednesday or Thursday, excuse me. This took place right here. So I saw this, this big spike both ways. I'm not too sure if that was just like, some type of news. Well, it was catalyst of the news because GBP, if I'm not mistaken, dropped news at 7 a.m. But we saw this on both ends, so we knew that something dramatic was going to take place eventually. So then I kept watching, still in the channel, so I'm not taking no trades. Then I saw this take place. I saw a price come down to this level. Then I saw this bounce, and then I saw this extremely strong bearish engulfing that took place. Boom, right here. When I saw that, I waited for it to close, and then it closed. And I was looking at these wicks, right? These wicks and candlesticks, right? To take an entry, right below these levels here. So you have these wicks, so I was like, all right, I'm going to take an entry right below these wicks. So I put a sell entry about right here. This closed, and then this candlestick came about, and I had a stop loss that was about right up here somewhere, right in this area. Excuse me, yeah, it was like right around this area here. Reason why is because you had all of these wicks to the upside, right? So, and I was sure that price was going to drop. So took my position, right? And then price started to drop, started to do exactly what I wanted. It retraced before dropping, but it was probably at most on this first entry, which was a 0.2 lot size, so $2 per pip. I think I was down maybe, I think it was like $34. Let's see. Yeah, it was something like that. At the most that I was down on this first entry was about anywhere from like $25 to $30. So I think I may have gotten a little bit lower. Yeah, it was somewhere around there, about $34. And then I saw, price continue to come down. As a result, I saw this, and then I was like, all right, I'm taking a bigger position because now this is confirming that price is moving in my favor. So I took a 1.0 lot size down here. Now, when I took that position down here, I had to sit through, about $170, or it wasn't, I don't think it was like a smooth 170. It was like close to like maybe 150, 160 around there. I mean, pretty much 170 of drawdown that I sat through. And then, price continued to go into my favor. So once it got to this lowest point here, I was about $160 up on the 1.0 lot size, plus the other entry that I had. So it was probably close to like about 180, 190 that I was up. And then we had this retrace and consolidation in this area. And then this area, this is what I saw. So when it consolidated or came back up, you know, this is what really started to grab my attention. Like, okay, what's taking place here? So came up to 1 hour, right? And then I took the fib again from this top line down to the lower wicks. And then I saw this. So I looked at it and I saw, all right, cool. There's a 382 at this line here, this bottom line. So I know that that's a key level, right? On the 1 hour and 4 hour, that's what 382 stood at right here at this level. So I was like, all right, perfect. You know, it's strong. It's a strong bearish movement. Looked at the 4 hour. I saw the same thing. See these long wicks, came down, 382 right in that area. So I was like, perfect. It's sitting right where I wanted to sit. Then I came down to the 15-minute again. And I just looked at, you know, all right, let's look at the most, you know, solid movement. So I came here. I drew it from this level down to the bottom right here. So this was like the impulse on the 15-minute. And I saw this 382, 618 right there, right? So I saw those two levels. And I saw price kept, it came above and it was sitting right in between the 786 and the 682, and it was coming down. It was literally just sitting in this area. There wasn't no strong bullish movements to the upside. It was just kind of like consolidating in this area. So I felt that price was going to continue to come down. So I left my position open. And I kind of came with the mentality of I'm going to just be patient, let this run its course. You know, if I get stopped out, so what? I get stopped out. It's still a good trade because I follow my plan. But if it goes into my take profit, you know, that's even better because I listen to my plan and I listen to my ideas and I just let the trade do its thing. So consolidated in this area, and then eventually, you know, middle of the night, around like 2 a.m., 3 a.m., price started to push down. So this is during the London session. Price pushed down, consolidated a little bit, and then pushed down and ended up, you know, closing my position while I was asleep around 5 o'clock, 6 o'clock in the morning, right in this area here. Now, the reason why I put my take profit right here, now mind you, this is hindsight looking at it. You know, most traders would be like, oh, yeah, just put your take profit here because this is the best position. This wasn't here. You know, if I were to look at it from like a replay standpoint and to take my trade from like right here, right? So when I'm looking at it from right there, this is all I see, right? If I were to play it back, let's see. Right? So right now we're playing a replay of what happened. So as you can see, I'm in some drawdown. Price is moving in my favor again. Moving in my favor. I'm feeling good. All right, price is retracing. I'm pretty much zeroing out right now. Moving back in my favor. Price is retracing. All right, now I'm going into the negative. You know, I'm feeling uncomfortable a bit, but I'm still sticking to my guns. Price is consolidating. Right now, I'm negative. At this point, I saw this and I was like, you know what? I'm just going to go about my day, not look at the charts, you know, go work out, go do whatever I want to do, hang out with some friends, just let the charts run its course. Because if you keep looking at it, you're going to get worried and you're going to be sick because you're negative for so long and you're thinking to yourself like, man, this is going to go against me. I might as well close out my position negative $160. But that's not the right thing to do. If you think that a chart is going to move in your favor and you have the right analysis, let it run its course. You see these wicks that are coming into this area, this line. So it's pretty much saying that the sellers are pushing it back down. And you got this taking place. Boom, boom. This was like in the middle of the night. All this was happening. I'm asleep right now. Completely asleep. Boom, we got a further push. Further push. Further push. Boom. My profit was taken right there. You know, and if it didn't take my profit right here, it would have taken my profit right there. And then we had this uptrend taking place. So that's what happened. You know, just looking at it from a hindsight perspective, and just kind of going back in time and then kind of letting it play out. But the reason why I put my take profit here is if you go back to a 4 hour, right? I saw this consolidation right there, which is that take profit zone. So this line, so let's change the color of this line. Let's make this line. What we got to do? Let's make this line. Who cares? Let's make it purple. So we saw this consolidation here. We saw price come down and turn around right there, right? So price stop, respect this area, come back up, more consolidation, long wicks down to this area. We saw more consolidation. You know, price come up to this area, come back down. Price come above it, you know, it's respecting that, consolidating right at that line. You get what I'm saying, right? Price tap, come down. You could just I could keep drawing this line back further, and it'll just keep consolidation, large wick up here, came back down. You guys get the point. Consolidation, you know, price is coming down, respecting that area. Like, it was pretty much a zone that, you know, price respected. So I was like, yo, if I'm going to take a profit, I'm going to take my profit right at that level. I'm just going to mark it and leave it, right? So I found that level, and I just found the price point that I was okay with, you know, and I saw, what was it? It was like 144.84 was what I took it at, yeah, like right in between there. So I saw it, and I was like, all right, cool. This is going to be my take profit. I'm not going to move it. At first, my take profit was down here, somewhere down here at 144.53, because it was like down here in this consolidation area. But I was like, you know what? Let me look further back to see what price did, you know, in between this area here, from this line to this area, what price was. And I saw that this was the most promising area to take profits because of all of the history going back. Down here, there was history, but because this was the first level that showed a solid area of resistance and support, I told myself, all right, I'm going to take my profits right there. I'm not even going to look at this area as a take profit too. I did that. I got closed out right at that level. So it stopped me out. And then as you can see, this is what happened. Boom. There's large movements. How many pips was this? Probably about 150, 160. Yep. 168 pips to the upside. 168 pips to the upside. If you were greedy and you saw this and you were like, yo, it's going to go down even further, and looked at this as just a retracement, you would have been stopped out, and potentially you would have took a big loss. Why? Because this candle, you know, yeah, it would have stopped you out at your stop loss area. But God forbid, this moved way too quick for it to stop you out at that stop loss area, and it stopped you out up here. You would have took from that one lot, standard lot size, you're looking at about 71 pips of, you know, drawdown. 72 times 10, $710, you know, of drawdown. $720 of drawdown, which is not great at all. That could blow up your account. You know, aim small, miss small. That's the name of the game. And then really the name of the game, you know, 44 pips to the downside, 28 to 30 pips of retracement. It's a solid trade. The name of the game is just to be patient. Just be patient. Just place your stop losses accordingly. Place your take profits accordingly. And let the trade run its course. Don't stop yourself out. Don't be checking in on it. The only time you should be logging into your app is to set another trade. If you find another setup, another good setup. Other than that, just set it and forget it. If you get stopped out, you set a stop loss for a purpose. If price goes in that direction, it's going to stop you from losing too much money. If you think that price is going to go in your direction, let it go in your direction. And to combat, you know, because a lot of people have low confidence when it comes to entries. Just take the position. At the end of the day, it's just money. It's just money. If you lose it, so be it. You know, you can make it right back. But if you're sitting here stuck on entries and you're not taking your entries, you know, you're going to miss a lot of opportunities. You're going to miss a lot of opportunity to see how your emotions react to, you know, price going against you, price going in your favor. You know, if you're a greedy person, if you're not a greedy person, you know, you want to take these positions. And if you see yourself, you know, having a hard time jumping into trades, even if you have a live account, set up a demo account and just take demo trades. You know, it's money it's not real money, but just take effective trades on your demo. Don't go taking you know, 5.0 lot sizes, 10.0, 40.0 lot sizes, because in actuality, you're not, in real life, you're not going to take those bigger positions. You're going to blow up your account every single time, because when you're playing with real money, who's taking 40 pip, 40 lot sizes? Like, who's doing that with the small account? You know what I'm saying? You know how much money that is? $400 each pip. Every pip it goes against you is $400. If it moves 2 pips, you're down 800. If it moves 10 pips against you, you're down 4,000. You get what I'm saying? So, yeah, you know, a lot of people say go big or go home, but allow yourself to grow your account to a point where you can take those bigger sizes and you can, you know, support $5,000 of drawdown. Take these small sizes. You know, enough trades of $300 profits, $400 profits will eventually grow your account to 4K, 5K, 10K. You know, that's what it's all about. That's the name of the game. Allow yourself to work. You know, let the charts work in your favor. Let time work in your favor. Once you do that, you know, the sky's the limit. You know what I'm saying? And make sure that if you're part of the 75 trade challenge, that you're documenting everything. You know, make sure that you're consistently documenting your trades and you're writing them down. You know, from an emotional standpoint, all the prices, when you took the trade, how you took the trade, was it a buy limit, buy stop, a market entry? Document all of that. You know, so you have that to research, to reference once you're finished with your 75 trades. You know, the formulas are already in place to keep up with your profits. So you know how much you're making on a week-to-week basis, on a day-to-day basis, as well as your overall account growth, right? So this is my analysis on GBP, JPY, my only trade I took from yesterday till today. You know, there's few that I'm watching at this moment right now, but you know, I'm gonna be analyzing the charts again over the weekend to see if there's any better trades that I could find. And we're just, you know, we're focused on getting better, you know, day by day. You know, I'm starting to see different trends in the markets, and it's working, right? So that's my analysis. One last thing that I want to talk about with you guys is, you know, how many pairs you should be watching. Last thing that I'm gonna talk about. A lot of people say that they only watch 1 or 2 pairs, or they only look at three pairs, you know, to just study those pairs, to master those pairs, and then they'll start looking at other pairs. I find this to handicap your trading. And I'm going to tell you why. Because if you're only looking at 3 pairs, I can guarantee you're forcing trades from time to time. You're forcing trades. Not every pair is going to move, you know, the way you want it to move. Versus looking at 27 pairs and just finding, you know, 3 to 4 to 5 pairs that are at key levels and watching them at these key levels. You see 1, 2, 3, 4, 5, 6, 7 right here, right? And you may be thinking, well, Anil, that's contradicting to what you're saying because you're only looking at, you know, 7 pairs. No, in actuality, my watch list has, you know, all 28. But what I'm doing is I go through them and I just look at which ones are at key levels, which ones are at certain points, certain price points that I can find, you know, possible entries, possible, you know, sell, buy orders. And then I'll move them from my main watch list to my this week's watch list. Now, in order to do this, you need a pro account, $10 a month. It's not bad, you know, to be able to have those 2 interchangeable watch lists that you can watch certain you know, pairs that week, and then have the overall amount of pairs that you're watching. But you have to look at multiple pairs because that's the only way you'll catch these large moves. Like I get, you know, trading, you know, a few pairs, trading 20, 30, 40 times, you know, on those just 2 to 3 pairs. But you look at it, I mean, you're on the chart so much more than most people are. Like, I'm pretty sure there are people that traded, you know, 3 to 4 times from yesterday till today, you know, and made less than I made on that one trade that I took. And I was just simply, you know, taking an entry where I saw a price was, you know, breaking a consolidation period and just allow the trade to move in my favor, you know. And as you get better, you'll time these entries so much more smoothly. Like imagine if I caught it from here where I initially anticipated. You know, you're looking at 100 pips to the downside. On a lot size, that's $1,000 move in one day, you know? So we're trying to get better to time these type of movements, to find these movements and to execute on these movements, these type of movements. That's what we're looking to do, right? 162 pips on a standard lot size, that's $1,600. You don't need to trade 20 times, you know, and try to make 1,600 every single time. 1,600 on one trade, and you pretty much have the rest of the week to keep placing trades. You might place 2, 3, 4 trades, you know, and end up the week with about $5,000 to $6,000, you know, versus someone who's placing 20, 30 trades every 2 days, and they only come out making, you know, $1,000 because they're taking smaller positions and they're pretty much scalping the market. So guys, just focus on key levels, you know, focus on, you know, finding the highest probable trades and execute. Again, I appreciate you all for jumping in and just kind of watching this analysis on GBP and kind of tuning in with my rant. But I hope you guys have a great weekend, and let's keep the market going. Let's keep making these pips.